Hello traders, in today's video we are going to be backtesting a strategy by Trader Nick. Now if you're unfamiliar with Nick, he's got a YouTube channel called Trader Nick, and one of his videos on this channel is a simple Forex trading strategy, how to catch 100 pips a day. Now I'm sure this part is just a claim to get people to click on the video, but nevertheless what we're going to do is test the strategy that he details in this video just to see how effective and profitable it actually is. So I'm not going to go and play this video to you. You can go and find it out if you want to see Nick's description of it. But essentially all I'm going to do is quickly run you through the strategy rules. So it's very simple. Basically, it's looking for trends and then trying to trade on the break of those trends. So essentially, the first thing we need to do is identify a trending move. So he's doing this through the higher highs, higher lows, lower lows, lower highs sort of thing. So if he sees a move like this, where he's getting price moving up, making higher highs, higher lows, higher highs, higher lows. So like I said, we've got a higher high, higher low, you know, so on and so on at these points as it moves up. Essentially what he's looking for it to do is to break this structure. So here we've got a higher high, here we've got a higher low. Price doesn't break this higher high, and then obviously it breaks this low point here, and so the price structure has now changed. The criteria by which he's judging a trending move upwards, higher highs, higher lows, has now been broken because we've not made a higher high, and the higher low has been broken lower. So in theory, this now could mean that the price is going to start to want to move downwards. And so his strategy basically is to identify moves like this, so it could be moving up or moving down, and then look to trade on the retest of this broken level. So in the case of a price move that's going upwards, we're looking to try and get in on the retest of the broken higher low, and on the other side it would be the broken higher high. So at this point when we are entering the trade, so obviously step 2, wait for price to break the structure of that trend, and then step 3, enter on a retest of that broken structure. So like I say, essentially we just enter as price retests that broken point. Stop loss is placed behind the previous high or low. So in this example, the stop loss would be up here. This would be our stop loss, and this would be our entry. And the take profit is placed to give a risk to reward ratio of 2 to 1. So our take profit would be like all the way down here. Take profit, take profit, TP. Be good if I could spell TP. So down at the bottom, and then essentially, obviously, what we're looking for price to do is to carry on in this sort of this way, making now lower lows and lower highs down to our take profit level. So it's a very simple strategy. There's not much to it. You're going to get quite a lot of trades using this strategy like this, just because it's not very complex. There's not much criteria that needs to be met in order for you to be entered into a trade. So I would expect us to get quite a lot of trades using this strategy. And then yeah, so what we're going to do, we're going to use ForexTester 5 to test this. I've loaded up ForexTester 5 here. We are going to trade the pound yen like he does in the video, and we're going to trade the 4-hour chart like he does in the video as well. I've got 3 years worth of data loaded up, so there's plenty of data there. And yeah, essentially I'm just going to replay the last 3 years worth of data. I'm going to look to see what trades we can get in on. I think probably what I will do is show you me taking some of the trades in detail, and then I'll fast forward through a lot of the data just so that we've got a good sample size to look at, and you can see sort of how ForexTester 5 works in this sort of environment for testing strategies in this way, and then we'll make some conclusions on the strategy. So let's get started. Like I said, I've got everything set up. Let me slow the speed down a little bit. I'm going to hit play on the data and we should start getting some candles forming. So obviously first thing to do is identify a trend direction. So quite clearly we are moving down on this chart as it stands. Let's see what happens here. Okay, so this is potentially our first entry. Let me show you why. So price made a move downwards. You can see we put in a low and then it started moving higher. So we were moving higher, little retracements moving higher, put in a low here at this point, and then price has moved higher to a new high, put in a new low, and then it's come up and sort of tested the high. You can see this wick corresponds with the close of these candles. And then what's happened is we've broken this low. You can see this candle here, this red one, has broken down below the low of this candle. So what we're going to look to do is basically, I think on the close of the candle there, I'm going to set a pending order. So we can click on that line. The stop loss is going to go above the high. So we're getting in at 138.12 essentially, and we're up at 139.14. So what's that, 102 points. So we're going to look for 204 points on the take profit. So we're going to be looking at 136.078, and we're going to be risking 1% of the account. We can place that order. So now when I continue the price action, let's see if we get filled. So yep, the sell position has been filled, and then how is this trade going to play out? Well, quite quickly we've been stopped out on that trade, so obviously we didn't get the move down that we were looking for there, and the upwards price trend movement there that we're seeing is continuing for now. So we'll carry on watching the price action and see what happens. Okay, so this is the next point where we're setting up for a trade. You can see the last time we traded was over here. We've had really nice price action actually moving up and making these textbook lower lows, higher highs, higher lows. My only issue with things like this is price doesn't move this way all the time, and using this as your sole focus of getting in and out of trades could be flawed. I mean, we'll see. This is the point of testing a strategy like this, but you can see we have had higher highs, higher lows all the way up to the top of this move here, and then this is the first time, I'll just use this red line again, this is the first time that we put in a high, a higher high, a higher low, failed to break that higher high, and then broken down below this higher low. So on the retest of this low, we can look to trade. So if I pop in my pending order level just here, the stop loss level is obviously going to go above this high. So what we're dealing with there, so we're getting in at 51, getting out at 59, so that's 108 points. So again, we're looking for 216 points if my maths is correct. So this would be our take profit. Place order, and then let's just see how this trade runs and if we get filled actually. So we've been filled, and we're going to get a reaction. So yeah, there we go, we got filled on this 2-to-1 trade. So that one worked quite nicely. The only thing that you might not have done in real life with this, I mean, again, it depends on the strategy rules that you're using. The strategy we're using is totally simplistic. There are very, very few rules, but we made this structure change here where we've got a lower high, a lower low. We've retested the previous higher low, and that's what got us into the trade. But you can see the actual structure of this market changes here because we put in a little bit of a high, we move lower, we then break it, we even break past this. So really we're looking at sort of higher highs now for a move upwards, but obviously that structure doesn't last very long and does eventually come down and hit our take profit. So if once you're in a trade you're ignoring any changes in structure, then I guess that's fine. And it's worked for us this time. So 2 trades in, I think, and we're at a net profit of $110, so we're obviously 1% up on this. So let's continue. So here we get another price trend change. You can see that we've sort of moved down to this level here. So this is where we got out of the trade. Price is obviously put in this lower low. This lower high here is tried to push down towards this lower low, never really got there, and then finally we've broken up and closed above this level here. So on the retest of this level, we can be looking for a potential continuation to the upside. So again, pending order, this will be just, I'm going to put this on the wicks, just because there's quite a few wicks there. The stop loss is just below the low there. This is going to be a buy limit. So 1% again, so we're looking to get in at 44, and the stop loss is up at 78, call that. So what's that? 44 plus 12, so 56, quick maths. So we're looking for 112 points upwards, so there's our 2 to 1, place order, and then let's resume the price action. Oh, we've just not been filled. Are we going to get filled? Yes, we are. And price quite quickly came down. Now, this is an interesting one, just from sort of a speculation point of view. Now, this is what you should do on your back tests, is look at what happened, because this is kind of a good starting point for a strategy. You've got something very simplistic, it's easy to test, and it's also easy to generate ideas as you do your back test. For example, if we'd have put our entry point right at the top of these wicks, say here, we'd have got filled on this trade after the break on this second candle right here. Price would have moved up, come back down, tested that same level, reacted. You can see it did. I'm going to move this line just temporarily. It did come back up to the close of that bullish candle before moving back down. Now, this could be some trade management rule that you implement, whereby if price has moved up and you're trading long, it's come back down, retested the level that it previously got to, so potentially making a double top, maybe at this point your stop comes to break even. I'm not saying that it's going to give you the best profitability for this strategy, but it is something you can test. It's something that you can sort of observe within your backtesting and go, I wonder if that would work. Jot it down somewhere and add it to sort of the list of amendments that you might make to this strategy, and you can test them in the future. It's all about improving the efficiency of your strategy. Starting from a really simplistic point like this is a great idea, but it does need building on. I would be surprised if this strategy gives us enough reward really for trading it. It's very simplistic, but this is a brilliant way to sort of generate new ideas for potential improvements to a strategy. So that one's come straight back down and stopped us out. So realistically, again, the price structure has changed, and we are now looking for sells, but the previous low really is this one up here, so we'd have to see a move up. So let's continue watching the price and see what happens. Okay, so it's going to get up there. So this is the previous low here. If I move this red candle, there's the previous low. So we would be looking for a sell limit at this level with the stop above this point here. That gives us, we're getting in at 0.3 and we're getting in out at, we're getting in at 46 and we're getting out at 0.3. So what's that? That's 57. So 114 points we're looking for this time. There we go, 2 to 1, place the order, and off we go. We do get triggered. This is not looking good, the gap up. It's just about survived there. No, there we go, gone. So again, this one hasn't yielded us any profit, and we've been stopped. So again, if this is going to carry on moving higher, we're going to be looking for a re-break back down to the downside. So price is moving up. Ooh, didn't break it. So at this point, all I'm looking at now is this really is our low point. I'm looking for a close below this point. Obviously, if price breaks above this point, then the trend is continuing according to Nick's rules. So that's what we're looking at. Right, we've got to wait for this candle to finish. See, you've always got to wait for the candle to finish. As a side note, I absolutely love trading these candles. This is so good. When you've seen consolidation like this, and people are looking for, you know, potential shorts. They're thinking, okay, this is looking exhausted. So people have got sell stops below this level. You get a candle like this that triggers them all and then closes back above the previous candle. It's called an outside bar, this. I covered it in 3 simple entry techniques. I think if it was not the previous video, the video before. And I really like trading these candles just because they're so indicative of the direction. You've taken out all the stops below here, and there's been so much buying down at this level that we've managed to not only take all these stops out, but move all the way up and close above the previous candle, and boom, off we go. Just a little side note, I really like that candle. So we're still looking for a break to the downside on this particular trending move in order for us to be able to trade this. And here we go, here we've got it. So let me move this red line. Here you can see that we've been making, again, really nice higher highs, higher lows, higher highs, higher lows, higher highs, etc., all the way up to this level where the highs start getting very incrementally high, and then we post this low, retest the previous high here, and then we've broken down below it. So our entry quite easily can be taken just on the retest of this level. Our stop is going to go above the high, so up here, and so we are getting in at 54. Stop loss is at 42, so that is 88 points, which is 172 points downwards. Is that right? Sounds about right to me. We'll place that. Resume. See if we get triggered in. Yep. Got a nice push down there, but we're just reacting. See, this is kind of what I meant on the previous trade. I'm not saying, again, not saying this will work, but we've had the entry, we've had a push down, price has come back up, it's pushed down again to this exact same level, you can see, and now we're reacting upwards. Now, I'm not saying that we're going to get back up to our entry level, but given that we've got a double bottom at this point, you could say, well, if price wants to come up, I'm just going to bring my stop down to break even, and I want to get out of this trade in these circumstances, only once you've seen sort of a double bottom or a double top at a particular level. Now, obviously, Nick doesn't, there are no trade management rules for this strategy as it stands, so we're just going to leave it. But that is something you could test. That might save you some losses. I guarantee you're going to miss out on some wins as well. But if it saves you more money lost than it takes away money that you win, it's a great rule to implement. But you don't know until you test it. So let's see what happens here. Get a nice move down and boom, we're out of that one. So I think we've tested 5 trades now and we're at 96, 98 up, so we're about 1% up. We must have had 2 winners, 3 losers. So what I'll do now is, I think you've got a good grasp of how this strategy is working. What I will do is I'll go through a big batch of this data, try to get up to sort of, let's say 20 trades, and then we'll look at the data and see what it's telling us. So I will see you shortly. If you click the link in the description, you'll be brought to this special partner page for the Disciplined Trader viewers, and you can see you do get a discount on the price. So the price for ForexTester 5 is $139, and like I say, I think it's easily worth that. If you're serious about wanting to backtest a strategy, then I would definitely recommend that you at least give this a go. You can download it and try it out for free. I'll link the previous video that I did in the description box below as well, and this is just a run through of the actual platform and how you can sign up for it, and there is a free trial available, so if you're thinking about it, definitely give the free trial a go. Again, just click the link in the description and you'll be taken to the ForexTester 5 website, and you can sign up. I think you just download it for free. I think you only need your email or something. It's all covered in the previous video if you do want to have a look. So I've just finished doing 25 back tests using the strategy that I detailed from Trader Nick on ForexTester 5. You can see in the statistics panel here on the ForexTester 5 screen, we have tested 337 days. That's 11.11 months, so just shy of a year. Total trades 25, and you can see profitable trades we had 6, losing trades we had 19, profitable trades consecutively we had 3, and losing trades consecutively we had 7. We on average get 0.07 trades per day. Now this is obviously backtesting on a 4-hour time frame. Nick says in the video that you can use this strategy on any time frame, which is why I assume 100 pips a day. He was sort of alluding to, you know, maybe getting a trade a day. So trades per month 2, essentially, on the 4-hour time frame. Profit trades per month 1 and losing trades per month 2, with a max profit trade of $209 and a max losing trade of $104. So you can see the risk to reward ratio is bang on, that's 2 to 1. That gives us a net profit, or actually net loss, of minus $684. It's a gross profit of $1,134, and we lost $1,800 on the losing trades, giving us an average profit per month of minus $61. Average profit of $189, that's on per trade. Now that's obviously slipped below the 200 mark because as the accounts got smaller, after a stint of losing trades, the 1% risk, so 2% gain, will be slightly under 200. So obviously that would work its way down, as would the average loss. So you can see the max drawdown on the account was $982, which is nearly 10% on this account. So that's given us a return over the year of minus 6.85%. So yeah, not a fantastic strategy, to be honest. Definitely nowhere near 100 pips a day, or even close to getting that. And like I said at the start of the video, the strategy is just too simple. There's not enough to it. So my critique of the strategy is, yes, it's completely underbaked. Completely underbaked. There's nowhere near enough in the strategy to make this profitable. But like I was alluding to earlier when we were looking at some of the trades, doing this is still a fantastic exercise, because you will notice things as you go through and backtest strategies like this, starting with it simple and building it up as you backtest. You'll notice things where you think, actually, that could be potentially a great idea, or that might work well, that might save me some losses. There was a trade at the start of June, so it was this one. Price had come down, we tested this low, this bottom low, then broken up higher, and basically I wanted to get in on the retest of this high. So price has come down, tested this, broken the structure up to the upside. As soon as we've seen a break of this, I've set a pending order to trigger us into this trade, looking for a 2 to 1, with the stop being down here and the take profit being, I think it was up here somewhere. It was literally just above this price action. So price came up, tested, and we moved up higher. But you can see we had 1, 2, 3, 4, 5 numerous tests up at this level, and the take profit was just above. And obviously, because the strategy is so simple, there's no other mechanisms, there's no trade management rules. So there's nothing in this scenario to say, well, bring stop to break even, or bring the stop up to the, you know, the break of the lower low in this case, just to lock in some profit. There's nothing. And obviously, because I just left it alone, as per the strategy rules, it found too much resistance up here and it rolled over, and then obviously stopped us out for a full loss, which could have been easily avoidable. But not only that, this strategy is so simple that it doesn't take any context from higher time frames or even previous support and resistance levels. Not to do Nick a complete discredit, he does mention in the video that he gives a couple of options of basically how you can take profit. The first one he says is just use a 2 to 1 risk to reward ratio. Another one he says is look at previous structure levels and use them. And then the other one is, he says, why not target a 1 to 1 take profit and then a 2 to 1 take profit, so you're sort of taking 50 off at the first target and 50 off at the second. Now I've obviously just used the 2 to 1 risk to reward take profit method in this backtest, so you could go and test those other ones and see how they fared. But having backtested this now and have a little bit of experience of how this is panning out, to be honest, what happens a lot of the time is that you're almost trying to catch like a falling knife. It's that thing you hear quite often. you know, price will be moving in a particular direction. Actually, over the course of this year, this market's fallen quite a bit. So a lot of the trades that we've taken are on the breaks of the structure of that downward momentum. Well, there was so much downward momentum that you never really had any confidence in the price moving up enough to give you that 2-to-1, because you're asking price to break the structure of the downward move to begin with, which is a retracement in itself. And then you're asking it to do that twice again, because your stop is basically that retracement. So then you're asking it to go 2 times more than that. So it's quite a significant retracement that you're asking price to do in order to pay you out a profit. So even just thinking about that, if you put that kind of move in the context of a strong down move, you're just going to get eaten alive. Because if price is moving down, you're asking for such big retracements that you're unlikely to get it. So in what context would that kind of price action work? Well, if you're looking at a higher time frame, we're using a 4-hour chart here, so you could use a daily or a weekly. If you've identified that price is quite comfortably within a range, that type of price action could work really well, because if you're getting to, say, the lower end of that range, and you've seen that prices, you know, abided by sort of these range boundaries over the course of 6 months, then there is better probabilities that you're going to see a better retracement from that lower boundary, because price is range bound and not trending. And so if you trade it within that context, you might have more winners. Obviously, in the video that Nick has done, he doesn't give you rules for that. There's nothing there. So again, that's something you could test. You could have 2 time frames up, and only when the environment is correct on the higher time frame, i.e. we're not falling like a lead balloon and trying to take long positions, do you take these sort of reversal trades. That might give you more profitability. And also, even just down to looking at levels on the chart you're looking at. So here, this is that same trade I was talking about. There is quite clearly a strongish resistance level here. So up into this price level, if I put a rectangle around it, you can see there. So as price has broken down here, this is where it sort of lasted its little swing. So as price comes up into here, you would expect some sort of reaction. Now, our take profit, just because it's an arbitrary 2-to-1, it doesn't take into consideration any levels that are on the chart, was slightly above there. Which, if you looked at that and used common sense, you might think, well, that take profit doesn't really make any sense, because basically what we're asking price to do is break through a potential strong resistance level and then take profit only just past it. Well, if it's going to break past it, the likelihood is it might move, let me select this, it might move a good bit further. Do you know what I mean? It might get to the top, it might get to the next resistance level. So it seemed a pointless risk to take in this situation for the reward that you were getting from it. So this is a very beneficial exercise to do. As I say, backtesting is brilliant. As for Nick's 100 pip a day strategy, from me it's a big thumbs down, but that doesn't mean that there's not potential there. If I was going to persevere with this strategy, what I would be looking to do is use it as a framework for price direction. And basically what I mean by that is that could give you your environment. So if in this situation, this is a 4-hour time frame, obviously we've had a price move down, we've sort of bottomed out just down here, and then we're starting moving up. Or maybe on a lower time frame, we can then look for trade entries as price is moving up. So maybe on, for example, if we were looking at this level here as prices broke up above there, if we move down to a, say, 30-minute chart, it's not kept. Has it? Yeah, I'm looking at the wrong price action. Bear with me. There we go. Maybe in here we can look to get some trade entries, and maybe these would work better. So for example, look, here we can see the ranginess of this, and as price breaks up, we could have had, I think it's got, yeah, we want 1%. Apply. I know this tool doesn't work amazingly well actually, but if we'd have put that there, we could have targeted, we want 2-to-1, stupidly this works the wrong way around. It takes the risk and the reward the wrong way around. So 0.5 is actually 2. But you can see if we'd have got in here, we'd have quite quickly had a profit on this trade using this mentality, because we've got our environment from another time frame, we've got sort of our direction bias from another time frame, and then we've dropped down just to take the entry. Now this gives us more room for that retracement now, because our stop is smaller, so our take profit's going to be smaller because we're in the context of a higher time frame environment. If that's confusing, let me know why it's confusing in the comments below, and I will do my best to explain it to you, maybe even do a video on it at some point. I'm conscious that I'm rambling now, so I'm going to tie up this video. Now, ForexTester makes testing something like this honestly super easy. I've been massively impressed with it. Like I said in my previous ForexTester 5 video, it was ForexTester that reached out to me, but I asked if I could be a part of their their team, hence I wanted to be an affiliate for them because I think the product is brilliant. So my affiliate link is in the description below. You will get a slight discount on ForexTester 5 and any data that you buy if you use that link, so feel free to check that out. That will be in the comments below. But I do genuinely think that this platform is brilliant. It makes back testing so much easier. Not only does it make it easier, it makes it more rewarding because of the things that I've mentioned in this video. You actually get a feel for how these strategies are going to work. You don't just get numbers. If I just gave you the numbers for this strategy, you quite rightly dismiss it. But having done the backtest myself, I know where there's points for potential. I know where there's things I can change now going forward and maybe make this a profitable strategy in the future. If you'd have just given me those numbers, I wouldn't have known that. So it is a fantastic tool for building your trading experience as well, because you sort of live these trades even though they're in the past. Yeah, I can't praise it highly enough, to be honest. I think it's a fantastic tool. So like I say, if you want to check it out, the link will be in the description. But that wraps up this video, traders. I hope this has been entertaining at the very least, if not informative. Like I say, any questions, let me know down in the comments, and I shall see you next time.